In the vast landscape of finance, trading, investing, and the allure of hot stocks captivate many individuals seeking to generate a regular income or even amass wealth. This journey into the world of finance is often multifaceted, requiring a blend of knowledge, discipline, strategy, and a touch of intuition. While the idea of generating a steady income from financial markets sounds appealing, it's essential to understand that success in this realm is not guaranteed, and it comes with its fair share of risks and challenges. At the heart of trading and investing lies the concept of risk management. Whether you're a seasoned professional or a novice, managing risk is paramount. It involves understanding the potential downside of every trade or investment and implementing strategies to mitigate these risks. This could include diversification across asset classes, setting stop-loss orders, or employing hedging techniques to protect against adverse market movements. When it comes to trading, there are various styles and approaches one can take. Day trading involves buying and selling financial instruments within the same trading day, aiming to capitalize on short-term price movements. Swing trading, on the other hand, focuses on capturing gains over a period of days or weeks by holding positions for a short to medium term. Both approaches require a deep understanding of technical analysis, chart patterns, and market indicators to identify potential entry and exit points. Investing, on the other hand, typically involves taking a longer-term perspective. Investors analyze fundamental factors such as a company's financial health, management team, competitive positioning, and growth prospects to determine whether a stock or asset is undervalued or overvalued. Value investing, popularized by investors like Warren Buffett, emphasizes buying assets that are trading below their intrinsic value and holding them for the long term. In recent years, the rise of hot stocks and speculative trading has garnered significant attention, fueled in part by social media platforms and online forums. These stocks often experience extreme price volatility driven by hype, speculation, or short-term market sentiment. While some traders may capitalize on these fluctuations, it's essential to approach such investments with caution, as they can be highly risky and unpredictable. Regardless of whether one chooses to trade actively or invest for the long term, building a solid foundation of financial literacy is crucial. Understanding basic financial concepts such as asset allocation, portfolio diversification, risk-reward trade-offs, and the power of compounding can help investors navigate the complexities of the financial markets more effectively. Moreover, emotional discipline plays a significant role in successful trading and investing. Emotions such as fear, greed, and FOMO, fear of missing out, can cloud judgment and lead to irrational decision-making. Developing a disciplined mindset, sticking to a well-thought-out trading or investment plan, and avoiding impulsive actions based on emotions are essential elements of long-term success. In addition to individual stock picking, investors can also consider alternative investment strategies such as index funds, exchange-traded funds, ETFs, mutual funds, real estate investment trusts, REITs, and commodities. These vehicles offer diversification benefits and can help investors gain exposure to various asset classes with different risk-return profiles. Lastly, seeking education, staying informed about market developments, and continuously honing one's skills are essential for staying ahead in the ever-evolving world of finance. Whether through books, online courses, seminars, or networking with other traders and investors, the quest for knowledge should be ongoing. In conclusion, while the allure of generating a regular income from trading, investing, and chasing hot stocks is undeniable, it's crucial to approach the financial markets with caution, diligence, and a long-term perspective. By mastering the principles of risk management, adopting a disciplined mindset, and continually expanding one's knowledge base, individuals can increase their chances of success and achieve their financial goals in the dynamic world of finance. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.